Hi, everyone. Thanks for watching the Daily Scan. Today is July the 11th, Friday. The week is over. Next week is options expiration, and the bull just continues to rage on, and it can't be stopped, apparently. I don't think the market will ever go down again. It only will go up. So, pretty exciting times. As always, I am not a financial advisor, so this is all for educational purposes only. Let's take a look real quick at the 10-minute charts I left off earlier today. Halfway through the day, market had gapped down in the beginning and then was starting to climb back up. Let's see what's happened since then. Well, kind of went sideways. So I ended at right about here, right around 12 o'clock, a little bit after 12:10, I think it was. So right about there is where I ended the call earlier today. The market has actually gone up a little bit since then, but not very much. I'd call it sideways, basically. So it didn't really go anywhere today. Technology pulled back a little. Financials, discretionary went up. Communications, you look back through the whole week, you can kind of get a sense. Technology basically went up at first and then went sideways. Financials has been going down. Discretionary's gone up. Communication services down. Industrials went up. And on the defensive side, healthcare started to make a comeback. Staples not doing much. Energy is the big winner. Utilities looking pretty good, and materials starting to move a little bit higher there as well. And then in the rotation area, growth versus value is still up there, actually. Discretionary versus staples still up there. Technology moving down. Semis still looks good, and internet still looks good. So overall, this still looks very bullish, even though there wasn't much that happened today. And one of the reasons for that might be that next week we have CPI. CPI is on the 15th. That is on Tuesday. So you are here. This is Monday. So right now the market's closed, of course. So Monday we'll be starting off right here. And the CPI inflation report will be on Tuesday, probably also the day that I will do the options expiration. That's next week too, on Friday. So we'll take a look at Max Payne probably on Tuesday at the midday. But let's take a look at the inflation, see what's going to happen, because I think this is going to move the market. You can see historically the market continues to go higher up until the end of next week, and then pretty much goes sideways and gets really choppy into the rest of the summertime. Actually comes down, I think, in August and September. But let's take a look at, go back to the website right here. And on the charts page, we will look at the CPI report right here. CPI headline. This is the base effect. So the base effect, this is how CPI is calculated. Every month, a new number gets added onto the front end, and an old one drops off of the back end during a 12-month rolling window. That's called the base effect. And it's nothing more than math. So when a small one, actually a negative one this time, is dropping off from the 12 months ago, and we get a new one that's added on, especially if it's higher, it's going to look like inflation or CPI is starting to move back up again. So CPI might be looking at, or inflation, and probably all the headlines are going to say this: inflation is back. All the tariffs are causing inflation. They're not. That's what the headlines will probably say. The other component of this, an important component, is oil and gas. So for that, let's take a look at commodities and see what they're going to look like. Now, this shaded area is what the CPI report will be reported on next week. This is June's numbers right here. So you can see this is DVC this is actually a ETF that you can trade. If you want to trade commodities using an ETF, this is everything that's in it: gasoline, crude oil, natural gas, agriculture components, and metals. And copper, of course, has just been flying higher. So this actually started down here, went up, went way, way up in the middle of the month, had a huge run up in the middle. Came back down, but still higher than when it started. Food, which are these over here, actually came down from the beginning of the month. And copper, you can see copper is in the background right there. Let me make this a little bit bigger and also rearrange some of these things so you can see them better. So copper is right here. DBA now is down here. CRB is there. Oil continues to move up. Gasoline continues to move up. But the important thing to look at is, move these down a little bit. The important thing to look at is, what did the month look like? Because that's what the CPI report will show you. So gas and oil in particular, they spiked in the middle of the month, had a huge run up in the middle of the month, but then came all the way back down again. However, they are still higher. So oil and gas still ended the month higher. They actually continued to go up. But because of that, combined with the base effect, inflation, I think, is going to look like it's probably going higher. Now, I don't know what the, let's see. I don't know what the forecast is. Let's look at the economic calendar. This is on Investing.gov. And I put this in my newsletter every week, so you'll get the updated information when the newsletter goes out tomorrow. So this is for this week. Not much happened this week. Crude oil inventories went up, actually. Interesting. Jobless claims went down, so jobless claims continue to go down. 30 years pretty much flat. But let's take a look at next week. And I don't know if there's a forecast yet. So CPI right now, yeah, so CPI previous was 0.1% going up to 0.3%. It doesn't have a year over year, but that is most likely going to drive the year over year up higher as well. Now, we don't know yet what the forecast or what the expectation is. The expectation most likely based on this is going to be higher. So the expectation probably is going to be around 2.5, maybe 2.6. If we go back and look over here, you can see we had February was 3. This is the June number, 2.4. Forecast was 2.5. So it actually dropped in June. But it's going to go back up to at least 2.5. And I think it could even go to 2.6. So again, I will go back to what it was in May. And then March, it was 2.3, and February was 3. So you can see it's been coming down significantly. But if it ticks back up, especially if it gets to 2.6 instead of 2.5, then all the headlines are going to say inflation's back. See, we told you. Tariffs are causing inflation again. They're not. This is the base effect. This is simply math. This has been here for months and months. This is the reason that Powell has not cut yet, because he knows this is coming. The next one is a small one as well. So even, especially with gas and oil going up halfway through the month right now, this one also might be come in at least flat, or might be even a little bit higher next month as well. But then after that, we've got big ones dropping off, and inflation is going to look like it's dropping off a cliff again. So we might be back to 2% by the end of the year, or by January. However, the next 2 months are going to be very difficult. And Powell has known this. And everybody that understands the base effect has known this for months. So he knows all the way back here, he knew what was coming in these 2 months. This month, actually last month too, was pretty small as well, but it actually went down. But with gas and oil and all the other commodities going up, everybody knows it. So we'll see how the market reacts. The market may actually have an excuse to sell off next week if that happens. Now let's take a look at on the market bias matrix page. These have been updated today, so you can see the date 7/11. Not too much happened. It just basically went sideways. So the whole market really has not moved much. But we'll look at the S&P right here. And one comment from a subscriber said that could be putting in a double top, and that could be the case. So there's the high right there. There's a high right there. So it could be a double top. Today is a spinning top candle. So that is indecision. And it's on a Friday. And a lot of times that means that the market that sometimes is a reversal candle, but you won't know until next week. So we don't know if this is a double top yet, but the market certainly is getting extended. So you can see right here the RSI for these two tops right here, even though they're almost, the second one is a little bit lower, but not much. But the RSI has come down quite a bit. So momentum is declining as the market basically goes sideways right here. So it looks like it could be running out of steam a little bit. Doesn't mean it's going to crash. Still got you've got the all-time high back here. You've got the expected move, which I have not updated yet. I'll do that tomorrow. Expected move was 64.32. This is probably going to come down. Might be a little bit tighter. But you've got the 21-day down here. You've got support down here. There's lots of areas of support right down here. So even if it does roll over, I don't think it's necessarily going to crash. Unless that CPI report really spooks everybody. We'll see. That's going to be the key. That's the wild card on Tuesday morning. Comes out at 8:30. So keep an eye on that one. NASDAQ 100. Same kind of thing. Maybe a double top. Also a spinning top. Indecision. So it won't know again until Monday. It also has decent support right down here with the 21-day. So again, I don't think it's going to crash. I think we still have a bullish market and maybe a choppy summer next couple of months. But at the end of the year, it's going to continue to go higher. I think we're going to hit 7,000. We're pretty darn close to it when we get there. One thing on the website for subscribers on the charts page, I do the Santa Rally each year. I'll do it again in December, but this is last year's Santa Rally. And I said, here's the beginning. There's January 1st right there. The three components of the Santa Rally were, one was negative, but barely. The other two were positive. And usually when that happens, the market ends higher for the year. And you wouldn't know it based on what happened from February, went all the way down here. But take a look at where we are now. So we're all the way back up here at nearly 6,300, not too far away from 7,000. But the Santa Rally looks like it's probably going to come true. The market will be higher than when it started, right there. So we'll continue to watch that. I'll do it again in January. I'll do another one. Let's now take a look at some of the updates, because I have updated a few things on the website that I do weekly. First, we'll look at the index charts, and we'll look at John Carter's squeeze chart. Yeah, introduced me to this back at the Money Show in November in Sarasota last year, and pointed out that at that time this was only a blue bar, light blue. These dark ones had not happened yet. But what he pointed out was in 2022, in November and December, when the market was hitting all-time highs, momentum was going down. And this year in December and January, when the market was hitting all-time highs, momentum was going down. Now in 2022, it was a cyclical bear market, and we went all the way down here. So this is the same bar as where we are right now. And look what these bars look like now. This one is almost ready to start to move back up again. In fact, this is a monthly bar, so the month is not finished yet. If this month of July keeps going up, this one actually could end up as a light blue bar, meaning that it's higher for July. So that actually will be quite bullish. It's already pretty bullish. It's not anywhere near what the decline was back in 22. So we are definitely much more bullish than we were back in 22. In fact, this bar right here, you can see on the ADX, the red was already above the green, where in this case, the green is above the red. So we're still looking pretty bullish. We'll look at the indexes for the week. This is year to date. These are all year to date, but you can see Bitcoin is number one, and these are ranked based on relative strength. So the strongest ones are in the upper left-hand corner, and the weakest ones are in the lower right. So for the week, gold is the weakest, but Bitcoin is the strongest. And then the S&P and the NASDAQ 100 are the other top three. We can look at the aggressive sectors and see which ones ended up higher. Industrials, interestingly, is the strongest one for the week, with communication services being the weakest for the week. And then we've got technology and discretionary up there as well. And the defensive sectors, The strongest for the week was in materials, and the weakest was staples. Staples actually starting to roll over. So this one, real estate and utilities are the three most defensive sectors. So you want those to be declining if we're going to continue with a bull market. But what do all of these look like together? You can see energy is in the second spot here. What do all of these things look like together rather than separating by aggressive, defensive, et cetera? So let's take a look at all of them and see which ones, based on relative strength, are the strongest for the week. And Bitcoin clearly is the winner. Bitcoin is in the upper left of the quadrant, and staples is in the lower right. So staples is the weakest. Gold is the second weakest for the week, and then real estate and healthcare. Strongest is Bitcoin, industrials, technology, and the S&P. Those are the strongest ones for the week. And you can see, where all of these play out. All right. Also on the market bias chart page is these are the top 20 gainers and losers year to date, and these have been updated as of today. So Palantir right now is the #1 stock, and basically in the whole market. This is just S&P 500 and NASDAQ 100. So these are just the large cap stocks. You can see over here, large cap. Palantir is #1, Seagate's #2. See what else? SMCI is up there. This is year to date, remember. Uber, GE, Dollar General, we looked at that earlier this week, is in the top 20. Micron's in the top 20. Dollar Tree. And then the ones at the bottom, Deckers, of course, United Healthcare, Enphase, still in the bottom 20. Lulu, Trade Desk, trying to make a comeback, but still in the bottom 20. Marvell. And then in the small and mid caps, MP had a fantastic move this week. It was #3, I think, last week. And I think I was #1. So they've kind of switched places. Hertz is up there. HIMS is still in the top 20 for small and mid caps. Celsius is in there. Next Tracker is in there. So those are all the Solar Edge still in the top 20. And the bottom 20 over here, I don't recognize too many of these. So you can take a screenshot or look at that at your leisure. But those have all been updated today. The other thing that I updated was the top performing industry groups. So you can see semiconductors. Anything in green is the top 10 performers. Gambling, home construction, home builders we looked at this morning at the midday. Recreational product, a lot in the energy space, oil equipment and services, integrated oil and gas, and coal. Real estate holding in the real estate side, and airlines. Airlines had a great run. Delta reported yesterday, and Delta did really well on their earnings call. The ones that are the bottom 10, computer services, renewable energy, this one has been bouncing back and forth, goes from the top to the bottom week after week. It's pretty amazing. Footwear, financial administrator, there's 3 in the financial side right now for bottom performers, and then business support services. So that's what those look like. You can check out either seasonality by clicking on this little button here, or you can look at which stocks are actually performing. This is intraday. So these are the best performing intraday. AMD is up here. AMD was up 1.5% for the day. You can look at it for the week. Now we can see, let's see if AMD is still on here. Semtech, AMD right here, up 6% for the week. On semiconductors, Intel down here is up 4% for the week. Look at the month. Now we can take a look at AMD, up 20%, almost 21% for the month. Really good move for AMD. NVIDIA also up 15% for the month. So that shows you why semiconductors is leading the market right now. If we also look at on the homepage, I want to look real quick at the new Dow theory. And right here is industrials versus transportation. This is the original Dow theory from Charles Dow from 1900, so 125 years ago. And what he said was, if industrials are going up, then transportation should go up as well. So the people that make the products and people that ship the product should all be going up. And right now they're pretty much in sync. So there's not a divergence necessarily between these two. Industrials is kind of going sideways, but transportation looks like it's actually going higher. So transportation actually looks better. Now, if we look at the newer version, this is equal weighted NASDAQ versus S&P. In this particular case, we can see they look pretty similar as well. So the NASDAQ and the S&P look similar. Now we'll look at the NASDAQ and semiconductors. Semiconductors should be leading, and yes, they are leading. They actually look better today than the overall NASDAQ 100. So the fact that the NASDAQ 100 is rolling over a little, but semiconductors are not, implies that semiconductors are supporting the market right now. So we need to watch that one. If that one rolls over following the NASDAQ 100, then the whole market could come down. And then the final one is communication services and internet. And clearly you can see communication services coming down while internet is holding its own. It's hanging in there. So that's another one to watch. If this one starts to fall apart, then the whole market is going to follow that down. So those two, I think, are the ones that are really supporting the market right now. All right, let's look at the dashboard and see what the market did. The VIX went up slightly, but still below 17. Crypto, Bitcoin, again, is the big winner. So Bitcoin is up to over 117,000 today. So it's looking really good. The 10-year started to creep up, started to move back higher again, which sent 20-year bonds down. And the dollar also starting to move higher. Energy, discretionary, top two over here. Technology, communication services kind of in the middle. Healthcare is a defensive sector, and that's near the bottom. So I would say this is not really telling us much. Yes, it possibly could be a double top, but we don't know that yet. So here's Delta. You can see Delta did really well. Had 2 great days for Delta. And the top 10 stocks on the top 10 list, ATRO, Astronics Corporation. That one actually was added to the top 10 list again. So these are the ones that have been in the top 10 list previously. RDW started to move higher as well. Second level down, we'll see if there's anything interesting. This is in the top 10 still. I'll show you the top 10 here in a second. Constellation Energy, hanging in there. The ones at the bottom of the list, again, Quantum. I mentioned this earlier today. Quantum stocks are starting to move lower. Here's another quantum stock. Sezzle, continuing to go lower. This had been just going straight up. Quantum there. Planet Labs started to move higher, but now it's rolled over. So these are the ones that are starting to go down. So if I show you one more time on the charts page, these have all been updated also today, although I haven't done the top 3 in each sector, which are then cross-referenced to the top 10. If they're in red, that means they're in the top 10. And what you can see down here, the ones that have asterisks are the ones that are brand new for this week. So if you do nothing else but come here and just take a look at the ones with asterisks, and notice right here, Astronics. Astronics is in the top 10 for the ones that have beat earnings and revenue. And if I click on it, you can see right there, clearly had a really good day today. In fact, it's breaking out. It's above the previous high. So that one actually might continue, and all the momentum looks like it's heading higher as well. So that one looks actually pretty good. What else is new? Palantir is new. Centrus Energy. This one has been on here before. You can see it just keeps moving higher right here. And then it pulled back and it fell back off the top 10, and now it's back on again. And then that one's breaking out as well. So that is interesting. It's called Centrus Energy, but it's actually in materials, non-ferrous metals. I'm not sure what they do exactly. MP Materials, I mentioned before, had a great run today, gapped up right there. This was in mining, the mining space. Does have a shooting star candle today, so need to be a little bit careful. And then over here, Celestica, which has been consistently in the top 10. Now these are the IBD, and I use IBD's format for the way that they present their charts. I add a little bit to it, but it's pretty much almost exactly like IBD's charts. So here you can see Celestica. It's just been continually, it's like a 45-degree angle just continually going up. It's been in the top 10 over and over again. And then it dropped out a little bit and then came back again. So these are ones to watch, the ones that have been in the top 10. Watch those to see when they start to come back. Down here are the large cap. You can see Raytheon, Boeing, and Schwab are all brand new. If you look at Charles Schwab, so it's just been having a nice run higher. In the mid caps, entertainment properties, this is a REIT. This is in the top 10 of mid caps, and in the small caps, there are no new ones added to the small caps. They just rearranged their order. Basically, MP Materials is now on the top. So that's those are all updated. That gets updated each weekend, and I've finished that actually. So let's go over here and take a look at the daily scan. Here's NVIDIA. NVIDIA just keeps going up. Does have a shooting star. So remember what I mentioned, that semiconductors are the one that is really leading the market. NVIDIA is the one that's leading semiconductors. So this shooting star, again, you don't know until it confirms the next candle. But if this follows along with that double top, and next week being options expiration, and NVIDIA starts to roll over, then it's not going to be good for the rest of the market. Let's look at Google. Google's still looking strong. This is the other one that I mentioned we need to watch. Communication services, internet in particular, and Netflix is in this group as well. Netflix is rolling over, so that's one of the leaders. So we need to watch that one. And then see what AMD is doing. AMD is sitting right up there. Also looks like a double top, but it hasn't started down yet, so it could be ready to break out. It looks much better than NVIDIA, actually. So it continued to move higher through the day right into the close and closed near the high. So let's take a look at the scans, and I'm going to do weekly scans this time. Actually, let me do one other thing first before I do the weekly scan. Let me look at the S&P again on a weekly basis. So here's the S&P on a weekly chart. You can see on actually the weekly charts right here. There's the weekly. You can see in this case, the RSI again is looking like it is showing a negative divergence. A little bit of one right here. Let me show you. So here's the price going up, and there's momentum going down on a weekly chart. So it's running out of steam. Of course, this big downtrend right here pushed it lower, which it should, but even in this little uptrend right here, the RSI was lower. So that's not a good sign, but it doesn't say for sure that that's going to happen. It's just a warning sign. It's just a canary in the coal mine. You have to look at all of the different indicators to see what everything looks like. If we actually go back, so that's what the S&P looks like on a weekly chart. Let's see what the NASDAQ looks like on a weekly. Very similar. So you can see the RSI down here. It might still get above this previous one back at this high right here. But even when it made these two smaller highs right there, the RSI was going down. So potentially a bearish divergence on the NASDAQ 100 also. So we'll have to see. We'll see what happens. Then this is a weekly. It actually has a spinning top candle even on the weekly. Let me zoom in on this a little bit. Let me bring this down to 2 years. And there's a clear spinning top. So it went up and it went down this week, but it ended the week right in the middle. So that is definitely implying that the market might be ready to roll over. So we'll have to see. I think that CPI report is going to be really important. The market is ready to do this anyway. It's just looking for any excuse. And the CPI could be the excuse that it's looking for that to happen. So very interesting. Let's go back over here and run a weekly scan. Let's see. Here's a weekly momentum scan. We got Kraft Heinz, which is a Staples. Eli Lilly on a weekly chart. It's got a green bar. So Eli looks like it's trying to make a comeback. NEO is automobiles. This is Chinese. You can see all the gaps over here. It's a Chinese company. Biogene is biotech. Talked about biotech earlier. Now the charts over here are daily charts, so keep that in mind. This is a weekly scan. And Regeneron is this one also is starting to move up. Let's take a look at another one. Here's I think there's a daily scan, weekly. Here we go. This is a bearish weekly scan. So Costco, right here, Costco is going down. Fortinet is going down. Monster Beverage. I was looking at this earlier. This is really declining. Came back at the end of the day. ServiceNow is on the list. Palo Alto, PayPal. This is weekly, even though the charts over here are daily. Rivian, Teva Pharmaceutical. So you can see here's Verizon and Walmart continuing to head lower. In fact, Walmart's sitting right on a key support area. So we have to be very careful next week because everything looks like it really wants to continue to go lower. And if the market does start to head lower, you can see on the portfolio page right now, the market timing strategy, which gets updated every day, came down slightly today, but it still did not give a go to cash signal. But if the market does start to really roll over, you can use inverse ETFs. Down here, I actually put a comparison between the bullish, this is a triple ETF, the bullish TQQQ and the bullish SQQ, bullish long and bullish short right here. And they typically are mirror images of each other. So you can see the bullish one has been going up since way back here. Basically, whenever the market timing strategy gave the long signal, which was right there, for the daily, it actually happened right there. So if you had been long from here all the way up to here, you actually shows you would have been up almost 40%. So this actually will show you the 3x, what the longs look like. However, notice on the SQQQ, starting to move higher. In fact, if I put this in right here, that's what it looks like. It's by no means giving a buy signal yet. It still is definitely down near the bottom, but it looks like it's curving up. But notice it goes up here and hits the 21 and gets rejected. So that could happen again. But if it doesn't, if it gets through the 21 and starts to move higher, this is a way that you can make money even on the downside as this one goes higher. You can look at this on a weekly chart. So there you can see back here in February when we started to get that rollover, which I told everyone was going to happen in early February. This right here for about 4 or 5 weeks until the beginning of April, basically. So about 6 weeks, middle of February to end of March, you could have jumped into the SQQQ and made money all the way up here. But big, huge down candle when the market reversed. So that's the downside. So it's definitely a risky play. Not for everybody. Be careful with this one, but something to watch, something to think about whenever whenever we get into a down market. There are ways to make money as a trader. If you're an investor for the long term, then this is just noise. You don't have to worry about it too much. But over here, these are all the short ETFs, all the ways that you can short the market. This is the Russell 2000, IWM. Here's the Dow. You can short treasuries if you want to, bonds. Here's miners, gold miners, silver, Bitcoin versus gold. You can do the VIX. So here's semiconductors. So here you see the long SOXL 3x, 3x semiconductors. Again, right back here from the time that the market timing strategy gave a long signal, just stayed in all the way up to here and it's still going up. But if it reverses and semiconductors go down, then this you can actually make money on the SOXS on the downside, just like back here in February into the beginning of April. That's one way to do it. So all of those are right here on the website. You can review those, check them out, look at them whenever you want. All right, that's it for today. Oh, there was one other question somebody asked me about Tesla. So I will look at Tesla here on the trend model. You can see Tesla right here has two down, short-term down signal, medium-term down signal. The medium-term just triggered this week, 2 days ago, July the 9th. So if we look at Tesla right here, they're reporting on July 22nd. Look at Tesla right here. You can actually see the signals. So this is a long-term up signal right there. But we've got a down signal and now a medium-term down signal for Tesla. Tesla was selling off, but now it's trying to make a comeback. So Tesla is very resilient, even though there have been a lot of issues with Elon Musk, and even though he's back, the sales overseas have been going down significantly. But Tesla is more than just a car company. It's really a technology company. So you have to think of it in a different way than just looking at the cars. And right now it has a green bar. So this is starting to move higher, and it will get a short-term up signal if it keeps going higher, probably Tuesday or Wednesday of next week. It'll get a short-term up signal. So right now, that's what it looks like. If we look at it on a wider view, you can see that it definitely has a downtrend starting at the peak right there, right down across these highs. So that's what it needs to break out of in order to get back on an uptrend. And there's the symmetrical triangle. So it's going to break out one way or the other, up or down. And once it does, it will move quite a bit. This does not tell you which direction it will break out. It just tells you that that's the support and this is the resistance. So one of those two is going to break out. The RSI right now is right down here, and interestingly, it's right on the 40 line. 40 is what is bullish for most stocks. So if the relative strength starts moving down, usually on sell-offs, if it gets supported by the 40 level on the RSI, that's still very bullish for the stock. And you can see it's done that twice right here. Now, during this long downtrend, it didn't. It dropped through the 40 level, tried to get back above it, but couldn't, and continued down here. Now, for the bearish side of it, it has to get back up above the 60 level. That's the red line. And it finally did right here and continued higher. So this is also bullish for Tesla. Let's look at it from a weekly perspective. There's weekly, and from a monthly perspective, if you look at it on a monthly, it's still going higher. It's basically just consolidating here. I mean, that implies that if it were to break out, if you think of this as a Darvas box, like I talked about earlier today, Darvas box across the tops and the bottoms, like that, it could potentially come all the way down here and still be in the box. And the trend line within the box looks like that. So it's still moving higher. So Tesla, I think, is still a very bullish configuration. And I don't think I'd really change my opinion on Tesla until it gets this low right here was 214. So this one over here is about 256. So about 250. Before, unless Tesla breaks the 250 and starts moving down from there, then it is still in a very bullish configuration, and it actually is heading toward the top of that Darvas box. So keep that in mind. we'll see how it does, and we'll see how it survives next week and the rest of the summer. All right, that's it for today. Thanks for watching. Please like and subscribe. Let me know if there's anything else you want me to check out. I tried to do some of the try to do longer term views on the indexes to see what they look like. So could be a little pullback next week. We'll see what happens on Tuesday. And interestingly, the CPI number is coming right during options expiration week, opposite week. So we'll see. Stay tuned for next week. Thanks everyone for watching. Have a great weekend, and I will talk to you later.